Hey there, I'm Steve Herod, and I'm on my third career. First, I was an operator. As CTO of VMware, I helped scale a pretty small startup at the time into one of the world's fastest growing software companies. Second, I was a venture capitalist, a partner at General Catalyst. I had shifted over to the other side of the table, investing in all sorts of visionary founders and interesting startups. And now I'm on my third career, mixing investor and operator roles. I'm launching companies with amazing co-founders as a partner at Juxtapose. So over the years, I've navigated some pretty interesting career juxtapositions, and this podcast is all about exploring those. Each episode, I or one of my fellow partners at Juxtapose will sit down with some of the brightest minds in business and hear how they manage their own career shifts. That would include some of the lessons they learned, the insights that might help you along the way as you're navigating your own career path. Our goal is to offer practical takeaways, honest reflections, and inspiration so you can make your next move with confidence. Today, I'm handing the mic to Jed Cairo, Juxtapose's co-founder and co-managing partner, and Ben West, also a partner at Juxtapose focused on healthcare. In this episode, Jed and Ben talk to the healthcare investing legend Annie Lamont. This is a great conversation about why healthcare is so ripe for AI disruption, the group's predictions on the biggest structural shifts in healthcare over the next decade, and how to build a great firm that can help create and support the companies driving all of this progress. We hope you enjoy it.
Welcome to the next episode of Juxtapositions. It's a huge pleasure to have my friend and someone I've admired for a very long time, Annie Lamont, here, as well as my partner, Ben West. We're going to spend the next 45 minutes or so talking about company creation, company building, company scaling, particularly in healthcare, where Annie has an amazing track record, and where Juxtapose spends some time as well. But before diving into questions, I thought we could spend a minute just sharing some background on everyone. So, Annie, I'm going to share a few words about you so that I can do some of the bragging on your behalf, but then would love for you to share a little bit of background, and then Ben, for you to do the same as well, and then we could dive in. Does that sound good?
Sounds great. Thanks for including me.
Awesome. So, Annie, for those of you who don't know, is the co-founder and managing partner of Oak HCFT, which she helped launch about 12 years ago. Oak now manages a little over $5 billion in capital with a portfolio of over 100 companies. Prior to Oak HCFT, Annie spent almost 30 years at Oak Investment Partners, leading healthcare and financial services. And she's backed some of the most legendary companies in the worlds of financial services and healthcare, including Athenahealth, Devoted Health, VillageMD, CareBridge, One Medical. The list goes on and on. She's been honored by lots and lots of organizations, including the Forbes Midas list multiple times. So Annie, it's a huge pleasure and honor to have you on the show. We appreciate it.
Thanks, Jed. Great to be joining you.
Anything that I missed that you think folks would?
No, I will just add to that, because you were like over 5 billion, and we're not measured by how much we raised, but we did close out almost $2 million fund at the end of last year, so now over 7 billion. But we do everything from early to late, $1 million checks to $100 million checks. And we love working with entrepreneurs at any stage, but we will definitely be doing more early in this cycle of AI. So I'm excited to talk about that.
Awesome. I know Ben very well. We've been partners for almost a decade, but maybe for the audience, Ben, can you share a bit of your background as well?
Annie, it's a real treat to be on the show with you. Quick background on me. I've been doing Juxtapose style investing most of my career. Originally at a firm called Accretive in New York. We did a lot of healthcare tech and services companies. Really learned up on the model at that firm. After Accretive, I left to go to business school, but then started working at the West Coast Fund and led the process to start a business called HIMSS with them. HIMSS is a direct-to-consumer telemedicine company. After HIMSS, I worked with another Accretive alum and then a couple other guys to start a business called Strive Health, which is a risk-based kidney care vendor. And then after Strive, joined Juxtapose. At the Juxtapose, I focused on mostly healthcare, but also some financial services. So businesses like Earned Wealth, which focuses on serving physicians, and Bluebird Kids Health, and a handful of other healthcare services companies. So excited to have this conversation and appreciate your time.
Awesome. Well, maybe to get us started, I'd love to talk a little bit about trendiness. And Annie, you mentioned AI and in the age of AI wanting to go earlier stage. I'm guessing that has something to do with the prices that AI companies are fetching. Um, we'll talk plenty about AI, but maybe just to start, if we zoom out a bit, uh, venture capital is obviously a category where certain ideas or themes get momentum. That momentum can build. Sometimes the pendulum can swing too far. What's your take on trendiness and venture capital and where we are in various AI cycles and healthcare cycles from that perspective?
Yeah, no, I mean, it's interesting because, in terms of AI and healthcare, the reality is I started my career 15 years in biotech. It was really the very beginning. They founded Genzyme and Cephalon, Alkermes, Alexion, and a whole host of companies. And then in 2000, with the advent of the internet, flipped into Athenahealth was the first company we invested in. It was the first cloud software company. And certainly you could say the internet, brought in a wave of new companies, accelerated things that were more really B2C and consumer. Obviously, people know Google, Amazon, et cetera. It didn't do that much other than cloud software. And there were only very few cloud software companies in the 2000 to 2010 period. And we all know the position Athenahealth now holds in that world. But if you think about it, not much really was transformative and until maybe 2013, 14, when digital health came in. But even that wasn't, right? I mean, the only thing that really started healthcare changing and like virtualized some portion of it was COVID. So, that obviously 2000, 2001, people actually, doctors and patients realized that they could actually virtually talk to their doctors, and hence HIMSS and virtual models were born in B2C and obviously some, B2B models also added virtual as an option. And it enabled, some other business models. But I would say none of that was truly transformative until AI. And I think it's really the first time, and maybe the time I am most excited about in my entire investing career, because AI is different. I mean, in 99, 2000, the issue was, people were building the internet ahead of demand, and video hadn't come into place to really consume demand, consume bandwidth. Now you can't even keep up with demand. So we're trying to build infrastructure, right, to keep up with the demand of AI across every industry. But, I will say we do healthcare and fintech has always led in terms of teaching us, like, what's the next generation of technology, software approaches, business models that may bleed into healthcare. And it's really been the inverse here in that healthcare, because I think it's so lacking, there's so much workflow that's so complex and has so much friction to it. And it's so behind in terms of its how it is deployed software in intelligent ways, that I am really excited about all the things that can be done, obviously in the provider world, healthcare system world, that really didn't exist as opportunities administratively and clinically. That obviously the consumer market we're seeing through ChatGPT and even Claude and the use of that for the consumer. And then we can talk about, life sciences. I'm back to life sciences. I may not be investing directly in therapeutics, but with companies like Chai and drug design, the use of AI is going to accelerate the identification of therapeutics in just an unbelievable way. So it is like, I think it's actually underhyped, not overhyped in this moment.
Yes. I like the boldness of the call, and for what it's worth, I'd say that we are less maybe attuned to that pendulum swinging because we're not in the capital markets in the same way, but we also feel like it's very early days for to see the full impact that AI can have. And maybe Ben, you could kick us off on this next one. I think relatedly, one of the things that we think a lot about is what the winning business models and configurations within AI businesses will be long term. We see and hear all the time that businesses that worked their butts off in 2022 or 2023 now have products that are actually quite easy to build in 2026. And I think it makes it, in some ways, it's easier to build and back something that will have traction in the next 12 to 24 months, but maybe a little bit harder to know what has sustained value 5 or 10 years from now. Maybe, Ben, you could talk a little bit about how in some of the AI businesses you've been working on, you've thought about that. And then Annie would love your take as well.
I try to think about, in some of the businesses, trying to apply certain history lessons. And I think in the case of software, you have a set of what I would call history lessons or like principles for building valuable software businesses that are probably largely still true. I don't think we've seen like the rules change entirely, but whereas you may have been able to build a business with that was maybe fairly marginal on certain characteristics, like sources of value are usually like, oh, there's a lot of user training around your software, or you're a true system of record, or you have proprietary data on which to train your piece of software, or that your piece of software leverages, or there's certain network effects to your piece of software. I think those are all still sources of value, but a business that was perhaps marginal on some of those before is, would have been valuable before, but is probably dangerous today. I think when we think about software, and particularly in financial services and healthcare, we've been a lot more focused on much more aggressive about verticalizing certain interventions and models around customer bases we believe have unique needs. So we looked at a lot of horizontal solutions at one point. We've shifted to be much more focused on vertical solutions where we can really surround a customer with a suite of our tools. We've had the mindset of like, okay, how do we build something that's extremely sticky and durable? Annie, I'm curious how you've thought about this. You see a lot more different companies than we do. We're sort of in our maybe a bit more focused type of building or investing. But curious what you've seen in terms of businesses that you're more confident in, or ways of applying AI either in software businesses or in other businesses that they get more excited in this moment.
It's certainly, there are a couple of different models, and in healthcare, the tech-enabled services, like you have care delivery and you're embedding AI the smartest way. I mean, certainly that is, that creates some unique advantages, because the direct delivery of care is something that's hard to displace, other than, if it's primary care virtual. Like, I do think that AI as a front end is going to be incredibly powerful in leveraging primary care and even some specialists in terms of diagnostics. But I do think the ability to integrate well into care delivery, particularly in this first inning, is going to be very powerful and protectable. If in the software world, I agree with you. Like, we just think that if you're deeply embedded, workflows are complicated, you have hold of the customer. I mean, there's a reason even in Epic, they have a beachhead. It's a very strong beachhead. I would really like to see that beachhead go away in the next 5 to 10 years, and hopefully it does, bit by bit. But I think even with some of our companies that going in, obviously having, very strong tech along with deeply embedded understanding and integration into workflows. I do think this first generation of AI companies that are getting into healthcare systems, provider offices, into payers, will actually, for the most part, have some advantages. Particularly if it's deep enough and broad enough and integrated enough, versus somebody that comes along 2 years from now. Like, I do think actually it is a bit of a land grab right now for some of these opportunities. We have a company called Blue Jay that is on the legal side, and it is tax research. So it's used by lawyers, it's used by accountants. It is a huge knowledge engine. There is massive advantage that they've been around for 10 years, but really AI-fied in the last couple. And I think now they have, they'll have like 60 million, like transactions on it in the next couple of years. And so I think that's going to be very hard to displace something that unique. Now, it's not going to be the scale maybe of a Harvey or a Ligera, but I think the reality is it's actually more protectable. So there's like huge value in that. And I think it's this combination of data, like a Bloomberg model, where they have a lot of data and they just have to be really smart about, using AI, embedding it and making sure they protect their flank while they're like, moving offensively forward too.
One follow-up, Annie, is you mentioned comparing Blue Jay to a Harvey, and there's this tension between TAM and the depth of product market fit. You've had big winners that serve broad markets. You've had big winners that are more narrowly focused. When you're looking at a new opportunity, how do you determine which to prioritize? And are there any heuristics that you've developed over time, or does it end up being more case by case?
Honestly, I think it's a little bit more case by case, because this is where valuation matters, obviously, with smaller markets, right? And so I would say that we're probably more barbelled, not just in, yes, we're going early and later, right? I mean, we're probably doubling the amount of early that we're doing now in this cycle of investments. But I would say that we are shooting the moon more often. Like now we're looking for bigger opportunities early in the market, and we're sort of willing to pay up for those. And if it's a niche opportunity, and I'm sure you're seeing this too, where, well, it's a wedge in. We're going to own this market, but then we're going to build on top of that. We're going to have this market and this market as expansion markets, and some of that will actually happen with unbelievably great entrepreneurs, and some of that won't. A lot of that won't, right? And so you got to believe the first story is actually going to give you a return. But I would say it's not. The 3x is not going to cut it in this market. You really got to believe that these things have upside. And I think with the smaller market opportunity, we just have to have valuations that are reasonable and believe the amount of capital to get there is reasonable. And so there's a heuristic. It's just like, hey, we're just not going to, it's got to, somebody can't be saying, hey, I'm going to raise $100 million round where everybody else is, and it's going to be at 600 million, but your total market opportunity is $1 billion. That everybody's going to get realistic about that, because otherwise we're just going to repeat 2021 again, and a lot of people will be unhappy. So I think valuation only matters with the smaller market opportunity, and it doesn't, obviously it doesn't matter as much with things that we believe can scale. And I think if we find opportunities like Fundamental is a large tabular model, like massive opportunity in that, and so less market, less valuation sensitive.
What maybe you mentioned this idea of the exceptional entrepreneur being able to turn over card A and then turn over cards B, C, D, and E in a way that maybe a less talented entrepreneur couldn't. Are there certain attributes that you think are higher correlation with exceptional entrepreneurship? And I'm curious if in the moment we're in, which you described as having land grab elements, if any of that changes, like does the 10x entrepreneur of 2026 look different than the 10x entrepreneur of 2016?
I think there are going to be 10x entrepreneurs that got lucky. And we've all got lucky as investors. So I'm like, let's hope for a few of those, right? But I do think if every time we really won big and won big, and multiple opportunities with people, they're obviously they're incredibly smart, right? I mean, just the exceptionally smart chess playing smart. And what's exciting to me is that this is a period of time when a lot of really smart people are coming into the entrepreneurial world, and also have commercial sense, right? And that doesn't always match. And I would say now younger entrepreneurs really do have that commercial sense. So it's exciting to see that convergence of brilliant tech talent as well as commercial sense converge. But I think it's really important that an entrepreneur is confident but not arrogant. And I would say, the Park brothers, the Brad Smiths of the world, I mean, those people are like really comfortable in their own skin and super smart and super confident in general, but are always asking questions and always worrying. So they are chess players. They're always mapping out what could go wrong, what's the next move somebody else, what's the next move they should be making, and then building for the long term. And I think that's really important, because they're confident and arrogant entrepreneurs, and they can just drive you right off a cliff. So I don't love those.
We've been there. Ben, I know that you've been building companies in a creation model for your career, and worked with lots and lots of different entrepreneurs and CEOs. I'm curious if there are any attributes that intuitively would make someone successful that you're coming to be less enamored of, and maybe some things that would have been yellow flags in the past that now you're more attracted to.
It's been interesting just to think about folks that I've worked with, and just maybe some of the evolution in my, I think maybe what I've come to rely on more. And I think the biggest thing has been a little bit of the transition from the focus on pure track record and not really trusting yourself to judge, to a little bit more judgment and a little bit less pure track record. We really like to work with people that have been there and done that. And at Accretive, we had a way of thinking about talent that tried to really isolate like key things that person needed to be able to do in a role, and then went really deep on proof that they were great at those things and had done those things. I think today I feel like I lean on intrinsics and a willingness to evaluate intrinsics more than I did before. I think some of the most crucial moments in our companies, and I think the places where the person in the role makes such a big difference, are in these places where their hunger to win fundamentally makes the difference. So I think willingness to kind of do what it takes, that hunger to win mindset, and a level of like almost a whole bunch of things downstream of that are super, super fundamentally important. I think that as a variable that people can prove in their track record, but fundamentally you start to feel when you spend time with them, has become a much more important part of my own process for getting a sense of whether someone's going to be successful and whether they're going to be someone that you want to work with for 5 or 10 years.
Yeah, 100%. I agree with that. I just think it's about judging people at this point, and not necessarily. A lot of them don't have a track record. The under 30 crowd may not have been funded as much in healthcare before, but they actually understand it much more deeply than an entrepreneur did 10 years ago. It's fascinating.
Maybe for the audience's benefit, Annie and I got to know each other by serving on a board together, and one of the things that I was struck by in that experience was, I feel like the impact per word or per minute of your time was very high, and there are many venture capitalists who, very successful ones, who serve on lots of boards, and it becomes at times an impediment to them having impact. And I felt almost the opposite when we worked together. And I guess I would be curious, what do you think makes someone effective on a board, and what do you think makes a board overall effective in having a positive impact on a company?
Well, as you know, most of what's important doesn't happen in the board meeting. So that's not really that relevant. I would say, every company needs something different. Like one is just figuring out what your role is, like what's needed at the company. What does the CEO need? What does the company need? What's being covered by other VCs, so that you are complementary to each other. Because I think we all play slightly different roles on different boards depending on what's needed. And I think it's almost like entrepreneurs. I mean, the reality is I think when you have an instinct that something is not right, addressing it, there is no point in. A lot of people don't like to be the bad guys. Let's just put it that way, right? They don't like to be the bad guys, or they don't want to pick it up and say, oh, this, like my baby's ugly, or this, this person, this VP of marketing isn't cutting it, or this CFO isn't cutting it, or, we just got to do things differently, or, is it time to pivot? And I think that's hard. I mean, I think that is one thing that people like to go along, get along, and it takes time to actually commit to these companies and try to make them work. And so I think a good board member is just somebody, probably first of all, doesn't get in the way, doesn't like to hear their own voice for the sake of their hearing their own voice, doesn't feel like they've got to be the smartest person in the room. They just want the companies to succeed. Period. The end. They want the CEO to succeed, the founder to succeed, the company to succeed. Like, what can we do to help that along? And that's all they care about. Get their own ego out of the way, get their own whatever's going on, dynamic out of the way, and just focus on that. And then be very clear about what you can impact and what you can't. And then try to constructively work with a board and a CEO to contribute to those things.
Annie, I'm curious how you think about the role of independence on the boards for your companies. Are there any things that independents need to do differently, or places where they're particularly valuable or perhaps not valuable? Just curious because it's a little bit different than being an investor, but theoretically should be very similar.
I would say independents have a tough job in a venture-backed company, right? I mean, in that at the end of the day, often the VCs, I mean, you either have a super strong CEO and everybody's just following what they say for the most part, happy with that, or the VCs are very involved, and then the question is, what's the independent doing that really makes their voice heard? And so I think usually it's an operating person where the CEO has tremendous respect for them and feels like they can either help them with customers or management. It shouldn't be somebody, I don't think, that the VCs put in that they feel is, another vote at the board, or is, maybe that person helps with talent. But I think in general, it just should be somebody that the CEO could really respect and learn from, and also, was helpful in their marketplace. I mean, that's, as we all know, it's like everything's so targeted when you're an entrepreneur. It's just like the immediacy of assistance, and helping, constructively help the CEO get done what he needs to get done and knows to stay out of the way. I just have seen too many independents brought in, and, they're like, this person, we need somebody that looks like this on the board in terms of their background or whatever. And, and then they feel like it's wasted time too. So in general, my boards are smaller these days, get small boards, right? Don't want a lot of, it's just too, the intensity and what you're trying to accomplish in a early stage company is so focused that you just don't, the distraction of managing a board is, I don't know, not really that important unless, they can be targeted in their help. And you can often just get them from an advisor, and it doesn't have to be a board member.
To move us in a slightly different direction, one of the things that I can imagine is interesting about your job is you're primarily serving as a thought partner, a backer, an advisor, a governance source to people building companies, and at the same time you're building a company, and I know that you've built an amazing business and culture, and I'm curious what lessons you wish you could have given yourself if you went back to 2014 at the outset of building your firm?
We always preach to our own teams that, hire the best people when it's not working out, like do the right thing for that employee and yourself, right? People wait too long to make changes in their own management team. And particularly now that, the world is moving so quickly and companies are growing so fast, they grow out of junior teams. And, that's like an average 2-year life cycle for, a lot of these management teams. So I would say, I think the thing, having been in the business for a long time and seeing my last partnership, Andrew Adams and myself had a wonderful partnership, and still do. The rest of my partnership was a little less functional, and just watching that and thinking about their inability to rethink what they were doing and address, and just keep learning, right? I think what's exciting about what we're doing and have done is we've hired great people in, we continue to do that. But, over the course of now 12 years, we have a lot of people who've been with us 7, 8, 9 years on the investment professional side, but we also, over time, people have gone into operating roles because actually being an investor wasn't right for them. And some of that had to be coaching. And then they completely appreciate it. Just like when you have somebody in the wrong role at one of your companies. But it's always hard to do. And you just have to, get ahead of it. And if you approach it constructively, in terms of the best thing for that employee or associate and yourself, it tends to work out. So I think culturally people just keep, I would say, rethinking things constantly. And I would say, if there's one thing I would have done differently at our firm, it's, 22 happens and it's, you're busy investing in a new fund, raising another, new fund, and we probably went a little conservative in 22, 23. And we're also, we're a little different in that we don't like losing ever. And so we work our companies really hard to try to not make that happen. And honestly, I probably would have done a little bit more early sooner, and I would have probably not worried as much about that element. In the grand scheme of things, I always feel loyalty to our companies and to our LPs in terms of making sure that we have as low losses as possible. But it's really been a fetish of ours to work that side of it. And that is definitely not an issue for most VCs. So they move on so quickly. So maybe we have a little more balance on that front in terms of how much time there, versus new things.
Yeah, that's interesting. I think that's something that we struggle with ourselves. Being in the company creation business and being concentrated in what we do, it does lead to almost a moral obligation feeling, which is valid and valuable, but at the same time can become disproportionately time consuming versus value creation.
Well, and I think in venture, you always have to have a positive mindset, right? You always, as Warren Buffett said, when others are, greedy, when others are fearful, you get greedy. When others are greedy, you get fearful. So I don't know. We're kind of in a mix right now, but mostly greedy, so yes.
Yeah. Okay. So last one for both of you. Ben, you can go first. So if you had to bet on one big structural shift in how healthcare companies are built over the next 10 years, and you can't say AI, what would your bet be?
The idea that the consumer can be more in the driver's seat is something that's kind of waxed and waned in healthcare, and it's one of these features that I think is going to be true for a lot of categories. Is just the idea that the average person can actually kind of supercharge their thinking on a given topic, or supercharge their education, or become, at their fingertips, they've got access to basically all the world's information. And right now, people are learning from it. And it's, I think today, facilitating better conversations with physicians and just better communication with family members, things like that. But in in a couple of years, once that's been true for a while, I think the consumer is going to be a much better advocate for themselves than they have in the past. And I think when that's true, we see a lot of emergent properties of that, which are hard to predict, but I think will have really meaningful implications for how people use the healthcare system. When I was at Accretive, I was a board observer at a company called Accolade, and I feel like that business was one of the early value-based care businesses serving employers. And there's so many random experiences I've had since then where random stuff that we learned at Accolade or that we saw at Accolade has shown up in different contexts. That was true for HIMSS with using asynchronous telemedicine to gather information and make decisions. It's been true for another business I've been involved with that does a lot of advanced care planning for complex patients. There's just a bunch of powerful things I think that happen when you put tools in people's hands and information in people's hands. And I don't know exactly how all the ways it will manifest, but I'm excited about it at the least.
Yeah, no, I agree with that. But it's also going to be interesting. You see what Anthropic and OpenAI and others are doing, and I don't want to be competing with them either as I think about models, but hopefully leveraging off of what they're doing. I do think it's a little bit, you sort of made this reference, but Back to the Future in the sense of when managed care and HMOs came in the 90s. And if you actually look at, the 90s versus the 2000 to now period, I mean, the cost of care was actually, drug costs weren't exploding then, but the cost of care, was, inflation was very low, during that decade. And I do think that everybody always says, well, we've hit a breaking point, but I actually kind of think we're hitting a bit of a breaking point. And I think two things will happen. One, I do think alternative health plans and approaches are, what was the neural network is now an intelligent neural network and an intelligent, like you've just got, the Garners and others that are, I'm sure us now at United, Aetna is now creating their own, Cigna is now creating their own alternative plan. I do think that will become more popular. And I think that people will be willing, once they see that these plans actually provide great care, but are, and cost them less. I just think that is going to be more in the psyche of people. And brands will hold less sway. So brands, I mean, like local hospital systems, et cetera. So I think I'm excited about that. And I do think that, the whole drug side is, from research to clinicals is going to be, rethought, re-engineered. Obviously China's putting pressure on that model in a good way, I guess. I don't want it all going to China, but I think they're lowering costs in clinical trials and so drug development. So I want that here. And I think the FDA has got to really just look at this as a crisis. Like this is an existential moment and they need to get on it and reform and rethink everything they're doing.
It's interesting you say that. We found ourselves attracted to the life science space. We're not going to be developing drugs, obviously, but it feels like one of these socially important, massive categories where there's going to be increasingly economic and regulatory forces that drive efficiency and new ways of thinking, and we're excited to participate in that as well.
Yeah, no, agreed. I mean, administrative costs have obviously exploded the last 20 years, and there's no good reason for that. So much of that, you told me I couldn't use AI, but so much of that.
No,
we eliminated. So yeah,
it's. I keep waiting to be tired of talking excitedly about AI, and the moment hasn't come yet. Maybe next year. But anyway, Annie, thanks so much for joining us. This was a lot of fun. And Ben, thanks for joining as well. And hopefully we can do this again soon.
Great. Appreciate the invite. Good to talk to you.